Hi everyone. In this video, we're going to look at DocuSign's fiscal 2022 third quarter investor results to highlight why everyone is talking about DocuSign right now. The stock jumped double digits after this announcement, so let's look at some key figures and understand what had investors excited about DocuSign stock. Overall, revenue increased in the third quarter to 645 million. This was up 18% from last year. This is excellent growth because if you remember, last year the worldwide economies were still not as far along in terms of reopening economies as we are now, and therefore there was more use of digital signature solutions, e-signature solutions, which DocuSign provides compared to now. So the fact that it's increasing 18% versus a tough comparison is impressive. That said, the net loss per share worsened to 15 cents from 3 cents last year. DocuSign is having to work harder to close contracts to sign deals now that every business is not out there looking for e-signature solutions. It's not front and center on so many enterprise minds. And so DocuSign is having to spend more on sales and marketing on its sales motions to kind of get people on board, get businesses on board. And here's what one of the things that impressed the market was that billings totaled 659 million, which was up 17% year over year. Of course, billings are the contracts that DocuSign signs, and it's sometimes revenue is less than billings because some enterprises will sign contracts for, let's say, 100 e-signatures, but during the quarter they may only use 50 of them. So DocuSign cannot recognize it as revenue until it serves all of the contract that it has signed. So until that happens, it's categorized as billings. Net cash from operations was 52.5 million. This was down from 105 million last year, less than half. This is a little bit troubling that cash flow from operations dropped so much. Of course, again, this has to do with the fact that it's not as easy for DocuSign to onboard customers as it used to be, and so it's having to spend more to get customers on board, whether it be on sales and marketing, whether it be on getting more people on board, so hiring more sales staff, or spending more on marketing, advertising. Those sorts of things are bringing down profits and bringing down cash flow from operations as well. So DocuSign ended the quarter with $1.1 billion of cash on hand, and considering that it is generating positive cash flow from operations, it's in no trouble of running out of cash or anything like that. It's got $1 billion and it's bringing in more every quarter, so they're okay with that. They can continue their growth phase, continue expanding their business, because let's face it, DocuSign offers incredible convenience to the legacy signature methods. How many people enjoy having to drive down to an office, sit down, look at 20 pages of documents and sign them all, and then drive all the way back home? If you could just do that online, that is incredibly more convenient for the customer. It's also more convenient for the business because now it doesn't have to work with the customer to try and get them to come to the office, which can also be a friction point for converting sales, right? You might get a customer to sign an agreement to buy something, but if they have to come to your office to sign that agreement, they might hesitate, versus if you can just get them to sign something digitally, that might speed up your sales process, convert more sales, versus having to force the customer to come to your office. So overall, in the long run, I think DocuSign has excellent growth prospects. In the near term, it may be troubled because fears of a recession is causing enterprises to pull back spending. That said, the company's guiding to fourth quarter revenue of 639 million, which is only a slight deceleration from the third quarter. But more impressively, it's guiding to billings of 710 million. So a more significant difference between billings and revenue in the fourth quarter compared to the third quarter. And in my opinion, this is what got investors excited about DocuSign stock. This is why the stock jumped double digits after the announcement. It's because the company is expecting to sign on more people, sign more contracts in the fourth quarter. And this might be because the management knows it's got some deals in the pipeline that haven't closed just yet, but they fully expect these deals to close in the fourth quarter. So management is confident about the fourth quarter billings. So that's why everybody's talking about DocuSign stock. That's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.